Yo, what's going on, traders? Welcome back to the recap. It's going to be for Thursday, August 14th, 2025. And today I'm going to show you how I made $2,500 trading the NASDAQ. So here we are on my Lucid trading accounts. These are my 5 direct accounts. These are all instant funded accounts, which means there was no evaluation, no activation fee. I just paid and got funded instantly. And we can see I made $300 on each account. 300 times 5 is $1,500. I'm currently up $1,300 on each of these accounts. So far, so good. And I also made some more on the other props I trade. And if you want to get funded with the same prop firms I use every single day, all you need to do is use code LOOP for the best available discount. So with that being said, let's get right into it. So here we are on the NASDAQ chart. This is the 1 hour time frame. We're going to go back in time just before 9:30 open, as well as before PPI, which is our high impact news release. So heading into the high impact news, we can see some really clear and obvious accumulation here on the 1 hour chart. We see how price is trading back and forth, engineering liquidity on both sides. So if we fast forward a little bit, heading into that news release, we can see that PPI ended up sending us lower. We delivered some sell side, and we can also use our fib retracement. We can mark out the swing high, which is our all-time high, down to the most recent swing low. And then using our standard deviation projections, we can see we have the -2, -2.5. And if we look to the left, we also have this higher time frame imbalance. So we had a 1 hour, 4 hour imbalance. We also had a daily imbalance here. So we can see that the news sent us down to the -2 projection, to the higher time frame imbalance. Let's mark this out real quick. Now, to me, heading into 9:30 open, this looked like some very clear and obvious AMD. We had our accumulation, basically from yesterday at 11 a.m. all the way to 8:30 today. So this is when price is trading back and forth. Price was range bound, simply engineering liquidity on both sides. We then ran out one side of the liquidity. We ran out all the sell side, traded down to the projections and to the higher time frame imbalances, rebalancing some of the up move. So we can consider this to be our manipulation. We manipulated lower. And then what comes after manipulation? So we have A, which is our accumulation. We have M, which is our manipulation. This is your stop hunt, your liquidity sweep. And then after that, we have our distribution. So this is when the real move occurs and price seeks the opposing liquidity that was engineered during the accumulation. So heading into 9:30, 10 a.m., I was anticipating price to deliver higher to show a reaction off of these discount arrays, off of the projections, and for price to distribute higher to seek that buy side liquidity that was engineered. So we're going to clean up the chart a little bit, and we're going to drop down to some of the lower time frame. Some of the lower time frames here. We're going to head on over to the 15-minute. And here on the 15-minute chart, again, that accumulation becomes very clear and obvious. Very clear and obvious here. We see the sell side that was engineered. We see the buy side that was engineered. We have these equal highs and the equal lows. This delivery lower was a stop hunt, liquidity sweep, which makes it our manipulation. So let's see if price was able to distribute higher and attack that liquidity. So we'll mark out that buy side here. We'll drop down to the 5-minute. So another thing, along with the AMD, along with the accumulation, manipulation, and the potential distribution, what we can also do is we can mark out this impulse swing. So on this news drop, we can mark out the swing high down to the swing low. Your swing high is simply a candle that has a lower high to its left and right. A swing low is simply a candle that has a lower high to its left and the right. So we're going to get our fib retracement, and we're going to mark out this range here from the swing high down to the swing low. And then if we select 0.5, which is 50%, we'll be able to get equilibrium, premium, and discount. Better representation will be this right here. So we have our premium, we have our equilibrium, and we have our discount. Premium just means it is the range above 50%. Discount is the range below 50%. And we understand, based off of the concept that price is always either seeking liquidity or rebalancing, we're always trading from a premium to a discount and from a discount to a premium. This is because price is always rebalancing and delivering fair value. So this price action is just stacking more confluence, in my mind, for delivery higher. For price to seek equilibrium, trade up into premium, and then potentially complete its distribution and attack the equal highs, that liquidity that was engineered during the accumulation. So we'll fast forward here, heading into 9:30. We can see that price was doing some lower time frame accumulation, and then boom, right at 9:30 open, price ended up delivering buy side. We traded up into equilibrium. We traded up into short-term premium, rebalancing the down move that occurred during our 8:30 a.m. news drop. So at this point in time, I had identified that we were in potential distribution, that we may seek that liquidity, that buy side. So I was just waiting for an entry model. I wanted to see if fair value gap formed, which we ended up getting here on the 5-minute. So I was looking for price to retrace into this 5-minute imbalance here in order for me to enter into a long position. So we're going to fast forward a little bit more. We got real close to it. So if we look at the low of this candle, we can see the low was at 896. The low of this candle was also at 896. So we ended up forming equal lows. Price technically did not trade into this imbalance. Since price didn't trade in here, I didn't get any entry, and I simply continued to wait. So then we see right here, a few more minutes later, we got real close to the equal highs, to all that buy side that was engineered during the accumulation, and price failed to engage with it. We ended up delivering lower. So this movement here engineered more liquidity. This is a signal that it's very likely that we're going to end up engaging with this pool of buy side. And at the same time, we can see that price failed once again to trade into that 5-minute imbalance. We can also take a look at the 15-minute, and we can see that we had another imbalance form. So the 15-minute fair value gaps aligned with each other. We can drop back down. So I wanted to see if I was going to enter into a long position, I wanted to see price trade in to the imbalance. This is going to be my entry model. If price was not able to trade into it, I wouldn't enter into longs. I wouldn't chase. I wouldn't buy at the highs. I'd wait for a retracement into these imbalances. And if we couldn't get it, I'd wait. So there were two scenarios I was looking for heading into 10 a.m. The first is that we get a retracement into the 15-minute imbalance. This will be my 10 a.m. silver bullet. I'll enter into a long for continuation, and I will target that engineered buy side that was formed during the accumulation. Now, the second scenario, if price failed to engage with the imbalances, and instead we just grinded up higher and engage with the buy side, then I would wait for a change in the state of delivery. I'd hunt for a sell model, and I would target price to deliver down into the imbalances to rebalance, fill them in, as well as to trade in to 50% of the range, to trade into equilibrium, along with the equal low. So if we drop down to the 1-minute chart here, down to the lower time frame, we can see the price was engineering lower time frame sell side. 1 low, 2 lows, 3 lows. This is a pool of liquidity that was being engineered. So I waited for my entry for one of these setups to play out. We either get the retracement, we trade into discount, I enter into a long, I target the buy side, or we fail to rebalance, we leave these gaps unfilled, we sweep the liquidity, and then I would look to sell and target a retracement into 50% of the range and into these imbalances. So let's see what price did. We can see that price failed to trade into the 15-minute imbalances. We left them unfilled, and instead price pumped up and swept out liquidity. So if we zoom out to the 15-minute, we can also take a look at the hourly chart. But this to me shows that our AMD buy model was complete. We had our accumulation, price then manipulated, down into the higher time frame BISIs, down to our projections, and then we got distribution up to where? To the opposing liquidity that was engineered during that accumulation. So this is AMD, and the fact, so this is done. The buy model completed, and that analysis played out. I did not partake in that move. I didn't get no entry model. No problem. So we dropped down to the lower time frame. So now what I was going to be looking for was a change in the state of delivery, as well as a potential inversion fair value gap. That's another signal of a CSD. So if we mark this out here, we had our buy side that was swept. This is our stop hunt right here, if this will work. So we have our raid, This is our stop hunt liquidity sweep. And then all I was waiting for now was displacement lower. I wasn't going to short here. Not yet. I needed some more confirmation because price did pump up quite a bit. And in case price were to just continue to deliver higher and to seek the all-time high, I did not want to get stuck in any short position. So I wanted to see more confirmation. Another thing is that on that liquidity sweep, on that raid, price traded up and completely filled in this 1 hour SIBI here. So this is a 1 hour fair value gap. And if we look to the left, what do we have? These up close candles. So price traded into an hourly SIBI as well as an hourly order block, bearish order block here. So we have some higher time frame support. Price traded up on the liquidity sweep into these higher time frame premium raids. So at this point in time, we had a liquidity sweep. Price had also traded into the higher time frame key levels. So we had our sweep. This is your stop hunt, your raid, liquidity sweep, whatever you want to call it. And it was also in the 1 hour order block, 1 hour fair value gap. So now all I needed to see was a change in the state of delivery. And then I could target the 5 15-minute imbalances to be filled in. Now, why would I even target that? It's using the concept that price always is either seeking liquidity or rebalancing. What is the whole purpose of rebalancing? It is to deliver fair value. The best analogy, and I think ICT has mentioned it a few times, if we think of we're like painting a wall, right? We're painting a wall and we go too fast. As we're painting, we're going to create gaps. At one point in time, we're going to have to fill them in with the paint just to make everything fair. It is the exact same thing with price action. When we see fast moves that deliver a lot, this is a fast move that delivered, if we mark it out, deliver like 200 points, which is that's not a small move. That is a big move. So what is price going to do? We're going to rebalance. Don't just take my word for it. You can go back into your own charts on any asset and you will see once we form price swings, which is just formed by a swing high and a swing low or vice versa, swing high, swing low, or swing low to a swing high, we will see how price will deliver into 50% of a range. And you can check that for yourself. So once we got this delivery, I then began looking at some of the other time frames. I looked at the 4 minute, I looked at the 3 minute, I looked at the 2 minute. What was I looking for? I was looking for an imbalance. Why an imbalance? Because that is what's going to give us an inversion fair value gap. So I stumbled across the 2 minute. I shouldn't say stumbled. I was specifically looking at the 2 minute chart and I said, hey, we got our fair value gap. So what did I do? I stayed on the 2 minute. Why? Because this is the time frame that had a fair value gap. This is what I was hunting for. And we can also see we had some 2 minute up close candles. So if we were able to get displacement through, what would that form? A change in the state of delivery. If price is able to trade through the open of that up close candle. So we're going to fast forward a little bit here. And we're going to see how price ended up delivering. So we can see within a few minutes, price ended up forming a bearish change in the state of delivery as well as a bearish IFEG. This is your inversion right here. So we're going to zoom in a little bit. So what makes this a change in the state of delivery right here? You look at the last 3 up close candles. These are the last 3 up close candles on this up move. As soon as price displaces through them, we get some expansion, some momentum below the first candle that formed this series. Because we have to think about it. On the higher time frame, this is 1 up close candle. So that's why I'm using these 3. As soon as price trades below, displaces through this last up close candle, this right here is our confirmation that there's been a change in trend. So I can now anticipate for delivery lower. We can also see, if we look to the left right here, at this specific candle, as soon as we traded through this low, this is also my confirmation of an inversion for value gap. Yes, we had candle closures below the BISI, but for me to really consider this imbalance to be violated, I want to see the first candle here that formed the imbalance. 1, 2, 3. This is the first candle that formed the BISI. I want to see that first candle's low when we're using a BISI get violated. This gives me my confirmation of an inversion. It would be vice versa. If we have a SIBI and price ends up running through the first candle's high, then I would say, okay, now we have an inversion for value add. That's like a little bit of extra confirmation for me that we have an IVG. So now I had a bunch of confluence for delivery lower. I had more context, I had a narrative as to why price should trade lower. First things first, we completed the buy model. We swept buy side. This is a liquidity sweep. The liquidity sweep occurred within the higher time frame PD arrays. We see we have the higher time frame SIBI, and we have a higher time frame order block. So we have higher time frame support. Very, very, very important. Liquidity sweep, higher time frame key level. We then had lower time frame displacement, which created a change in the state of delivery as well as an IVG. This is a signal to me that there's been a change in trend, that we can now anticipate price to deliver lower. And now you may ask, well, where can we anticipate price to trade to? We have quite a few objectives. First, we have all the equal lows here. So we have this first low, second low, third low. We have relative equal lows, which makes this a pool of lower time frame sell side liquidity. All right. Then this aligns with what? We look at the 5-minute. We have this 5-minute imbalance along with this 15-minute imbalance. So we had imbalances that we could target. Why could we even use imbalances to target in the first place? It is because we understand price is doing one of two things. We're either seeking liquidity or rebalancing imbalances. To rebalance is to fill in. It is to deliver for value. We trade from a discount up to a premium. You bet your rear price is going to now trade from a premium to a discount, which leads us into the next objective. If we mark out this range here, from the swing low that formed during PPI, during that news release, up to the most recent swing high, right here. So from the swing low up to the swing high, this gives us our short-term dealing range. So I'm going to extend this out a little bit. Everything in red is premium. What makes this premium? Because it is above 50% of the range. 50% of the range is equilibrium. Everything below 50% is discount. We can anticipate price to trade from premium into discount. And we can see on the chart, we have a bunch of confluence. We have the equal lows resting right at equilibrium. I know it must be random. We also have the imbalances on the 5-minute, on the 15-minute, literally right at equilibrium, right in discount. And then if we zoom in a little bit and we mark out this range, when I say range, I'm referring to the manipulation. So we're going to mark out the manipulation, which is the highest high, this swing high right here. And then I'm going to go and I'm going to look through the most recent swing low that was formed prior to the swing point. So prior to the swing high, prior to this swing high being formed, I'm going to look for the most recent swing low, which is right here. So I'm then going to mark that out with my fib from the swing high down to the swing low. What does that give us? Our -2 and 2.5 standard deviation projections. So we can see all in the same vicinity. We have equilibrium, we have discount, we have the lower time frame sell side, we have the imbalances, we have the projections. We had so many objectives that were formed, which we can anticipate price to trade down to. So I'm going to clean up the chart a little bit. We'll turn this into equilibrium. So we have our 0.5, we have our lower time frame sell side, we have our imbalances, we have our projections, and now all I had to do was just execute. Boom, we got the IVG. Boom, we got the order block. How is it an order block? Whenever we get a change in the state of delivery, an order block forms. So these up close candles here, this series of up close candles, this represents our bearish order block. So I enter into a short position off of 76. This is off of the bearish order block. It's also off of the IVG. My stop loss was set at the swing point, this swing high here. I had a 30-point stop and an 80-point TP. I was targeting the lower time frame sell side. I was targeting equilibrium. I was targeting the imbalances on the 5-15 minute. I was targeting the projections. So we had a lot of confluence for price to go lower. And also some added confluence is the fact that we were trading up above 10 a.m. and midnight, which is our true day opening. Our highest probability sells, highest probability shorts will form above midnight open and vice versa. Our highest probability buys, longs, will form below midnight. So the fact that we were trading above 10 a.m., we were trading above midnight, just added more confluence for me to anticipate delivery lower. So let's see how price ended up delivering here. We have all this confluence. And at this point in time, all I had to do is just sit back, submit the time, have my order set, and just let the trade play out. So we can see price delivered really well. We rejected the order block, we rejected the inversion. Price ended up delivering lower to the equal lows here, to the lower time frame sell side. We traded into the 5-minute, 15-minute imbalance. We traded into discount equilibrium, and we also traded into the -2.5 projections. This was a super clean sell model, and the beauty of it is this stuff is repeating every single day, every single week, every single month. It's all fractal, it's repeating all the dang time, which makes it so great. That concludes this recap. Thank you so much for watching. Like always, if you have any questions, make sure to ask in the comment section below and I'll answer them. And don't forget to like, subscribe, and share this video with all your trading friends. So until next time, good luck and good trading.